I'm Jim Cramer, and welcome to my world.
You need to get in the game.
Firms are going to go out of business, and he's nuts. They're nuts. They know nothing.
I always like to say there's a bull market somewhere, and I promise
Mad
to try to
money.
find it just
You can't afford to miss it. Hey, I'm Cramer. Welcome to Mad Money. Welcome to Cramerica. Other people want to make friends? I'm just trying to save you some money. My job, not just to entertain, but I'm coaching and I'm teaching, so call me at 1-800-743-CNBC. Now we figured it out. Now we know why we've been climbing. That's how you have to view this Labor Department hiring number that came out this morning. This terrific, this stunningly good 236,000 jobs that were created last month. It's one of the best numbers in years. Okay, now, look, you'd say, well, wait a second, Jim. The market didn't roar. The Dow gained 68 points. S&P rose 0.45%. NASDAQ advanced 0.38%. But well, we've been rallying for weeks on end, including 5 straight days, taking out the all-time high. And I think that's because the market anticipated this newfound job growth. You know I have been adamant that the economy started getting better the moment we had some certainty out of Washington, meaning we stopped talking about them. And I don't regard the sequester as being major. You know that. It was taxes that I worried about. I measure things like housing, the auto sales. I measure shopping, lending, plus the boom coming from all of our oil and gas. And these barometers have been signaling this kind of terrific growth, which is why I hope it doesn't come as too much of a surprise to you. Of course, the same people who want you to stay in your paycheck chains came out of their multi-million-dollar mansions all week to tell you that you can't buy stocks here because the economy is humming to the point where the Fed has to stop its bond buying program, maybe stifle growth, and rates will shoot up when they try to sell those bonds. These critics don't believe the Fed chief, Ben Bernanke, knows what he is doing. And they've wanted you to sell all your stocks. Sell, sell, sell! For the same reason, over and over again, for thousands of Dow points. Yep, these are the same wealthy souls who bemoan anything good that happens because, well, they've already made it. And they don't care if you make it, too. Look, I like to be as skeptical as anyone else, but it's entirely possible that Bernanke actually does the right thing, that interest rates go up, but the economy still gains steam and earnings. They're not crushed. That's been what's happened before. Now, I know there's been a lot, billions of bonds bought, okay? But look, it's the earnings of the companies that are driving stocks higher, not the Fed. And those earnings are real. The Fed isn't buying back the stock. The Fed isn't issuing the dividends. These are profits. And the profits are creating this rally. Believe me, the earnings aren't going away anytime soon. No, we know the truth. They're getting stronger. There's way too much emphasis from the talking head committee about how the rally has to end, and not enough talk about what if Bernanke can wean us off cheap money as hiring improves and both consumers and corporations keep doing better, as demonstrated from the transport index, from the Dow. These all-time highs aren't done lightly. Take it from me, 5 years ago, I think I was the biggest critic of Ben Bernanke around when the Fed chief failed to realize the jam we were in with the financial crisis. They know nothing. They know nothing. But when Uncle Ben got it, he saved the whole darn shooting match, the banking system, something many of the critics didn't believe possible, and a lot of smart people said they had to nationalize all the banks. They should have given Bernanke a little more credit. And they should show a little more humility in the face of this fabulous rally in stocks that they couldn't have done a better job keeping you out of if that was their mission, if that's what they tried to do. With all that in mind, let's take a look at what's happening next week and how we can try to profit from it. Yes, profit from it, because unlike a lot of these guys, I actually want you to make money. That's why I do the show. First, on Monday, we got Dick's. This is the largest sporting goods company out there, and we have to be prepared for what they have to say about two of the biggest purveyors of sporting apparel in the world, one much bigger than the other, Under Armour, the smaller one, and Nike, the large one. I get a lot of questions at Jim Cramer on Twitter about which is better, Nike or Under Armour. Well, Nike has a big business in China. I'm going to defer any decision about UA versus NKE until we hear the Dick's conference call, because they're going to tell us. Yeah, that's why we listen to these calls. They're going to tell us. And yes, I do like Dick's, but it reports before the open. After the close, we get some real controversy here. Maybe one of the most controversial stocks I follow, and it's Heckman. I know a lot of you are angry that Dick Heckman came on, the stock went down. But this is the company that disposes of fracking water, something that's integral to the process of reaching hard-to-get oil and gas assets in these shales we always talk about. As the glut in natural gas grew and nat gas drilling fell to a 14-year low as measured by the Baker Hughes Index, Heckman's earnings got hurt. But it's been readjusting and recalibrating via acquisition. And I think they will, let's say this, let's do this. They have to say something that will make us patient about a turn, and I think they'll do that. Tuesday's Costco day. Here's a stock that's been on hold since it paid a huge special dividend last year. All that happened in the interim is that the company's gotten stronger and stronger. My charitable trust used to own this stock, okay, actionalertsplus.com. But like a lot of other managers, we long to get back in. Keep hoping for a pullback. But given that Lowe's, Walmart, and Target all reported either subpar earnings or gave us tepid guidance and yet still soared anyway, I just don't think Costco is going to go down very much, if at all, even if it doesn't do a good job. And if it does, well, let me say, if it disappoints, it won't stay down for long. It's a buy. Also on Tuesday, Chevron hosts an important analyst meeting. This is one of my favorite oil companies with terrific prospects and a really amazing long-term positive view of natural gas. It's a lot I want to hear about. What are Chevron's plans for all the natural gas in this country? How does it feel about splitting off refining and marketing operations? That was what Hess talked about earlier this week, and we've seen it. Hey, we've seen Phillips 66 in Conoco. Remember, Phillips left Conoco. Marathon Petroleum, Marathon Oil. The two refining companies, Phillips 66 and Marathon Pete, they've rallied 24% and 40% respectively since the year began. Hence why I'm always telling you breaking up is easy to do. I mean, look, Chevron, if they split up, oh man, if they unlock that kind of value, it'd be gigantic. Wednesday, Starwood. Talking about unlocking value. Starwood, one of our absolute favorite hotels, holds an analyst day. And I think it's going to be a great one. Fritz Van Paschen, the CEO, has done a remarkable job growing this company, which includes St. Regis, Sheraton, W Brands, among others. And we believe travel is experiencing a huge rebound globally. Don't forget, Starwood's letting 100 new hotels bloom in China. And I think that the hotel business remains strong in the People's Republic, even if the real estate business is cooling over there. Ideally, we'd like to hear about the plans to break up the company, splitting it into a management enterprise, the timeshare business, and a standalone hotel company. The hotel business can be fabulously lucrative if you get it right, as we saw today when Wyndham Worldwide hit another new high. May I just say congratulations to Steve Holmes. He's the CEO of Wyndham, who happens to be one of the most shareholder-friendly bosses in the publicly traded world. Thursday, all right, this is a new one for me, at least for a while. Thursday, we get results from Diana Shipping. Now, we've hated these dry bulk carriers and made money forever. But you know what? The Baltic Dry Freight Index, which measures the day rates for dry bulk, has, I believe, put in the bottom. It creeps up a little bit every day, it seems. And while Diana isn't necessarily cheap and has already run up 23% for the year, I bet we're actually going to like what they hear. I'm going to stay focused on this shipping group all next week, people. I think you should, too. We also get a report from Ulta Salon. I hear I'm a little more conservative. This is a franchise beauty retailer that we liked for a very long time. But the management turnover here has got us pulling in our horns. We're not touching Ulta anymore. And I'm going to be in total listen mode. I will say, I am concerned about ULTA. United Technology, named my charitable trust owns, hosts an analyst meeting on Thursday, and I got to tell you, I think this is going to generate a lot of excitement, a lot of buzz. In the same way that Honeywell, which hit an all-time high this week, did after Dave Cote spoke about that fabulous company's prospects at his analyst meeting. I would be a buyer ahead of this meeting for United Technologies, particularly if we get any price break from just the market going down off of some number, or Spain or Italy, you know, or some guy coming on TV and saying the Fed is drinking the punch bowl, whatever, sterno. Most important, on Thursday, we get the results of the second round of bank trusts. Well, we had the first round, okay? I'm reiterating, I think that the second round is going to be a big let's just say a wake-up call for people looking at SunTrust. That's a bank that failed last time. We talked about it last night. We're thinking that a nice return of capital, perhaps a gigantic buyback of 5% of the shares outstanding, and a sweet bump in the currently meager dividend might be in order for STI, a once very proud bank that's no longer considered to be a blue chip. Finally, on Friday, we get February industrial production numbers. I usually don't highlight this number, but in a nod to all the money managers who fret endlessly about when the Fed will start hurting the economy by selling its colossal bond portfolio, these industrial production numbers figured mightily in the tightening decisions of Bernanke's predecessor, Alan Greenspan. I bet if we get a number that shows strong industrial production, these Bernanke blasters will call for his head for not immediately raising rates. Maybe they're all short stocks. Maybe they're not in the market and they just need it lower. I bet you some of them are actually not making money this year. Let me give you the bottom line. Unlike so many other talking heads, I actually like it when people are hired. I like it when you make money. I actually think that's good, not bad for the economy. I actually trust Ben Bernanke, silly me. I say what's good for the economy is good for the stock market and good for corporate profits and good for you, which once again we will hear about from a host of great American companies when they talk to us next week. Let's go to Denise in California, please. Denise.
Well, booyah! Is this that sexy Jim with a smoking hot body?
No, no, this is a different Jim. He's taken over that guy. What's up?
Yeah, I have a question about PetSmart. It's gone down since I bought it, and I know they offered poor guidance for the year. And also Ross Stores, they've gone down since I bought it too. Jim, should I buy more of each one now that they're down?
What did you start when you started? You were talking about. Oh, never mind. You were just discussing me. I just trying to get the physique thing down. Okay, PetSmart, I actually think was an overreaction. I think it went down too much. Ross Stores was an overreaction. I think that went down too much. These stocks are now in the penalty box, though. And Denise, we actually can't touch them until we see the next quarter. That may be a long time to wait, but I fear that people think, like Bed Bath & Beyond, that there's no coming back from these quarters. We've got to wait. Patience. Victor in Ohio. Victor.
Yes, sir. Jimmy, this is Victor the Valve Man Mancini from Columbus, Ohio. Great big Urban Meyer, bad mod Buckeye booyah to you, Jimmy.
Man, I like Urban Meyer. He has turned that. What a powerhouse. And you know what? Can we just stipulate that we don't need to watch SEC football every single weekend? There are other conferences. Go ahead.
Amen, Jimmy. Hey, the reason I'm calling, I'm a longtime investor in H&R Block because of their great yield. I've been licking my wounds the last couple years. Their story's changed here recently. They finally divested some of their toxic mortgage investments, and they're refocused on their core business. I sold 20% stake at 23. It's now at 27. Big run today. How much run do they have left?
I remember when this stock was considerably higher, sir, and I've got to tell you, I remember the sickening fall when it turned out all the other things they were doing that were bad. I think they put them behind them. I don't want you to sell anymore. I think this is a very compelling story. All right, what's good for jobs is good for the economy. What's good for the economy is good for the market. And if it's good for the market, it's good for corporate profits. So make sure you're listening to what these companies have to say. Because I got to tell you, it could be just still one more good week for those who are not frightened out of their wits and sitting with all their money in their mattress. Mad Money, be right back.
Coming up.